Hi, and welcome to another episode of Keeping Your Business on Track. We're here to inspire you and educate you to help you grow and elevate your mortgage and real estate businesses. So what are we talking about today, Nikki?
We are talking about VA loans.
VA loans, I love VA loans.
VA loans. There's a lot of information about VA loans, I think, in general. So we're actually going to be talking about some myths that go along with these VA loans. A lot of time, we get a lot of questions, a lot of statements about VA loans, so we're here to address those today.
Cool. Well, let's roll. What do you got?
Let's do it. Okay, so we are talking about qualifications. So are VA loans harder to qualify for than other loan programs?
Well, there is that misconception that it's harder to get a VA loan, and that's incorrect. Generally speaking, a VA loan the VA is less stringent on the borrower than they are in other types of loans. So some of the waiting or cool down periods, as they're called, for major credit events are less than those of a conventional loan or even an FHA loan. So again, the VA is more lenient towards the borrower or the veteran than other types of loan programs.
As far as qualifications go, what about like credit or debt to income? Are they flexible in that regard as well compared to other loans?
Actually, they're fairly flexible as far as debt to income goes. It takes a look at the total picture. Mm-hmm. Instead of having a hard stop at a certain debt to income, they look at what's called a residual income, or what's left over after everything else is paid. So it makes sense. If you make more money, but you have less expenses, you can push your DTI higher. Debt to income, that's the amount of money you pay out every month, and for credit cards, student loans, car payments versus your income. When that ratio is higher with certain types of loans, there is no going past a certain level. But on VA loans, they look at the total picture to make a decision on the loan.
Oh, okay. So it seems like it's a little bit more in favor of the client on the VA guidelines for that.
We got to remember that the VA loans are a benefit to the veteran, right? This is because they served our country, and they're giving lenient loan terms, or I should say more favorable loan terms, a little bit more lenient on qualification. Some people make the argument that it's 100% financing for qualified individuals, and then that's bad. But I will tell you, VA is one of the best performing loans out there.
Okay, awesome. Yeah, that is the misconception. So with that being said, so 100% financing. So is there a down payment required for a VA loan?
No, there's no down payment required for a VA loan. Obviously, you have to qualify and you have to meet the guideline, but for qualified individuals, there's no down payment required.
And then what about the loan amount? I know that there's different loan amounts for, if we're talking about conventional, FHA. What about for VA? Is there still that same?
Here's a shocker that most people don't realize is there is no max loan amount on a VA loan, even at 100% financing.
Wow.
So in the past, there used to be a max loan amount for 100% financing, and a couple of years back, they changed it. So you can actually we've done, loans of $1.5 million, $1.2 million on the river, 100% financing VA, really great rates. It is one of the best loan, if not the best loan program out there. It is an incredible loan program.
Awesome. Interesting. Okay, so we're going to talk about appraisals. This is the common misconception or the myth out there that VA appraisals take forever.
Okay, well,
do they take forever?
That's simply not true.
Okay.
We have some great veteran or VA appraisers in Brevard County, all over the country, all over Florida for sure, that they work on specific timeframes that the VA has allotted for them. They have very specific schedules they have to keep in order to stay in the good graces of the VA, because we don't have our own VA appraisers. Lenders don't have their own VA appraisers. We order, just like every other lender out there, we order appraisals through the VA, and the VA uses their system to assign an appraiser at random on the job. They have to meet specific criteria. They have to be part of the VA's list, but they also have to they keep a tight scorecard on these veterans, and they have to meet the guidelines of VA over and over again in order to stay a VA appraiser. And so the VA has strict guidelines on timeframes, and the timeframes are very reasonable. I mean, we still, here at Morgan Financial, we track everything, but on VA loans, we're still able to get the VA appraisal ordered and back the majority of time to get our loans clear to close in less than 10 days.
Oh, wow.
Yeah.
And then do the appraisals, do they stick with the house? Do they stick with the client, to the VA client? How does that work?
Well, you're really hitting all the questions we get over and over and over again. So there's VA loans and FHA loans. Okay, VA loans are for the veteran. And on VA loans, when the appraisal's ordered, the veteran owns that appraisal, right? They have to pay for it, they own it. And so that appraisal sticks with the veteran, not the property. FHA loans, I can't speak as an expert on FHA loans as I can on a VA loan, but it sticks with the property. And the
Okay.
veterans, the borrower still has to pay for the loan on, excuse me, the borrower still has to pay for the appraisal on an FHA loan, but that appraisal will stick with that property for a certain amount of time. Not the
Okay.
case on VA.
So next question.
Okay.
Can you use a VA loan 2 times?
Yes.
Tell me more about that.
So, yes, you can use your VA loan more than once. Okay.
Okay.
You can use it, I don't want to say unlimited times, every situation is different. But when you use a VA loan, you have what's called eligibility, and your eligibility gets used up to a certain point. You can actually have 2 VA loans at the same time. And so the reason for this is because let's say you're stationed in North Dakota and you get transferred or PCS to Patrick Space Force here in Brevard County. You might own a house up there, and that's fine. You might have done that with a VA loan. Then you get transferred to Patrick and you want to buy another house. Well, let's say you put renters in the other house, which is allowable for the VA. And then you come back to Patrick, you want to buy a house here. Well, you have what's called bonus entitlement. And there's a formula to figure out how much entitlement you have left. You might not be able to use 100% financing for your bonus entitlement.
Okay.
It's going to depend on how much you have outstanding and how much you have left. There's a calculation, but you can actually have 2 VA loans at the same time. And you can certainly use your VA loan twice as long as you've regenerated your eligibility. There's a specific term for that. You're going to have to cut this out. I don't remember what it's called for that. I said regenerated, but there's a nice name for it. I can't for the life of me remember it right this second.
So let's talk a little bit about interest rates on VA loans.
Okay.
Are VA loans, the interest rates, are they more favorable or less favorable than other loan programs?
It's a great question. So even though VA is 100% financing, remember it's a benefit to the veteran. And so the VA doesn't actually make loans. What they say is if you write a loan to these standards, we'll insure the loan against default. That reduces risk to the lender.
Okay.
So the veteran doesn't pay mortgage insurance. They pay what's called a funding fee at closing, and it's a certain percentage of the loan amount, depending on if it's subsequent use or second time or third use, or if it's your first time using a VA loan. So the first time it's less, subsequent use it would be more. The percentage is used, and that actually guarantees the loan to the lender against default. So the VA says, look, lender, if you make the loans hitting these guidelines that adhere to these guidelines, we'll guarantee the loan. And then so that way the lender takes on less risk and they can offer more favorable rates and terms and things like that.
Are VA loans, is there less default on a VA loan compared to other loans?
Typically, VA has one of the lowest rates of default. Now that changes. It used to be the lowest rate of default, and then some things happened, but it's definitely a lower default rate than say an FHA loan and some other types of loans.
Okay.
So it's still a very good performing loan.
Are sellers required to pay a lot of fees for VA clients?
That's a great question. So there's a big misconception that the seller has to pay a whole bunch of fees on behalf of the veteran borrower. Not necessarily. Who pays what fee is dictated by the contract and what's negotiated in that contract.
Okay.
The reality is there's some fees the veteran borrower just simply can't pay. They're not allowed to pay. They're called non-allowable fees. And so sometimes in the contracts it'll dictate that the seller pay these fees on behalf of the veteran borrower. Now, there is another way to do this. Some lenders they just don't have to charge these fees, but there are some title fees that can't be paid and some other little things. They're called VA non-allowables, right? And so some lenders charge these things, then they put that burden back onto the seller when in reality they just didn't have to charge them to begin with.
Okay, interesting. So with that, what is the seller allowed to pay then?
That's a great question. So sellers are allowed to pay all normal and customary closing costs on behalf of the veteran borrower. And there's some very specific things. In addition to that, they're allowed to pay up to 4% in closing costs, what's called sales concessions. And a sales concession might be prepaids and escrows, because those are not considered closing costs. They're considered sales concessions. They're also allowed to pay, this is crazy, the seller is allowed to pay up to 4% in sales concessions to help the borrower pay off credit debt in order to qualify for the loan. So not a lot of people know that. And so if the borrower has just some credit debt that's preventing them from qualifying, this can all be done at closing. So they don't have to pay a bunch of credit debt prior to closing and then risk the loan not closing. They would all be set up with the title company and the lender to be paid at closing. So when those, at closing, the closing costs or the prepaids, and then they would have a line item for credit debt, and that might help the borrower, or should help the borrower qualify for the loan, so that it's a win-win for both parties.
That's really interesting. What is, in your experience, what's the most common VA loan myth that you've encountered?
Why do you make me think on the spot? And this is going to be challenging. What is the biggest loan myth out there for the VA borrower? In the last couple of years, the biggest loan myth is, it's from the seller perspective. I don't want to accept a veteran contract. I'm going to have problems on time frames. They barely qualify because it's 100% financing, or, they're looking at the appraisals being a massive obstacle. And here's the reality is that, as far as qualifying, we've talked about that. It's actually more lenient and goes more towards the favor of the veteran borrower. As far as timeframes, if you're working with a company that does VA loans all the time, they should be able to repeatedly do these things in 30 days or less. It should not be an issue. If a lender says it's going to take us 45 to 60 days to close a VA loan, run as fast as you can. It's just not necessary. As far as the appraisal goes, we have great veteran appraisers. They go through more strict standards and guidelines than most conventional appraisers do. So we have great appraisers that are going to work hard to see if they can justify the value for the transaction, or for to protect the veteran, right? And as far as timeframes in general go, no, the appraisals shouldn't take longer. They should be of high quality. The one sticking point is, the appraisals require more inspection of the property. Not to confuse an inspection with an appraisal. They're two different things. We always tell the veterans, you should definitely get an inspection. The appraisal does not count as your inspection. Home inspection, they look at different things. But as long as the house is in move-in ready and safe, sound, and sanitary, there shouldn't be a problem with the appraisal as far as minimum property guidelines and standards and things like that.
Okay. If you had to give one piece of advice to our listeners, so our real estate professionals and mortgage professionals, what piece of advice would it be in regards to VA loans?
The VA loan is meant as a benefit to the veteran. They served our country. This is one small way that we give back to them in benefits, to be able to take advantage of this great loan program. It is a great loan program. There's lots of nuances to it, seemingly. Just to work with a professional company that you can rely on to give you answers to these myths and questions and things like that. So as they pop up, you can work together with them to overcome them for the benefit of your veteran borrower, maybe help educate the seller and things like that, the list agent on the transaction, or if you are the list agent, to be educated, but always rely back on your VA experts that you partner up with if problems and questions do arise. You don't have to be an expert. Just make sure you're working with experts who know what they're talking about.
Yeah, I think that's super important, just as far as that misinformation that's out there. So that education and teaming up with the right people, I think that's very sound advice, Joe.
Absolutely.
All right, well, I think that wraps it up for our VA loans and the myths and debunking some of those and getting out the education to our real estate and mortgage professionals out there. So with that being said, please visit our website at www.morganfinancial.net. We do have a VA home loans page on there with a bunch of these questions and answers. Feel free to write us a question and answer as well. We'd love your honest feedback for this podcast. If you have a question about VA loans, just loans in general, sales, whatever it might be, we would really love that feedback. It does help us out with creating this content for keeping your business on track. And we'd love for you to leave us a review as well.
Look, down below, there's comments. If you have any questions, if we didn't address something, if we made a mistake, please let us know. Anything you can put down there, like, share. If you found this information relevant or it might help you or a client or a friend or a family member or a coworker, please send it to them. And thank you, and we'll hope to see you next time.
See you next week. Bye.